What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. This is your home show where for 9+ years been providing education and options on what will be your largest investment and your most valuable asset, your home. If you're new to the show, welcome. Welcome to the Gumbo Nation. We hope you like it here. What took you so long? 9 years. Hey, if you want to join the show, 504-260-0995, or you can email to info@mortgagegumbo.com. On the show today, will 2024 be your year? What are the expectations? Got a question this week about that, and I thought, you know what? That's a good show topic. Let me kind of share thoughts on that. What's the future of home prices? I'm going to review for you. We like to share terms, right? This is education and options on this show. We're going to discuss what the locked-in effect is, and I'm going to tell you what others won't tell you. And then first-time home buyers, think CDC, not Center for Disease Control. God, no, not that. But our own acronyms. We'll tell you what CDC means when we discuss our first-time home buyer tips. Very simple as you're heading into 2024. So let me be the first to wish you a happy new year. Yeah, let's get it out there.
I feel like I picked the most depressing old language.
And you know what? 2023 for the housing market, and I think a lot of our wallets, we want to say good riddance, right? Goodbye. Let's change that calendar. And I think back of the New Year's, Dave, and what always, for me, as a kid, how long did it take you to stop writing the previous year when you were writing dates? Right?
Well, when I had a checkbook, which I'm still a dinosaur. I still write checks at least maybe once or twice a month.
Yeah.
But easily, 3 weeks to a month, maybe.
Yeah. It's because now everything being automated, it kind of does it for you. But same, probably, the old gosh. And,
like, dang it, I know better.
And it's funny because this whole month, taking new applications and people putting in contracts, which, well, I go, you see the contracts have mistakes on them, so you got to kind of let the agent know. And then, I'm putting in the computer like, all right, hey, they're going to close on 1/15/2024, but I'm putting in 1/15/2023, and it's like, by law, you cannot close before, the
Right.
this date and that date. And I'm like, what are you talking about? And then I'm like, oh, yeah, by the way.
Whoopsie.
Yeah. So even with computers, right, when you got to manually enter that in, kind of get me with the hiccups there a little bit. But, hey, I don't even know what are the things to do. Right? I mean, God, I remember for years I would go downtown, right at the end there, the old
Jack's Brewery?
Jack's Brewery, but at the end of Canal Street, man. Golly, why am I skipping a beat with that building's called? The building at the end, right by Spanish Plaza. The high rise.
The World Trade Center?
World Trade. Golly, why couldn't I think World Trade? Man, they used to have that bar upstairs.
The rotating bar.
The
carousel bar. Yeah,
the
nice.
carrot, man, it was great. And, 2 of the 3 years went there, and look, you're in college or you're right out of college, and it's $100 all you can drink and eat and all that. But the fog would roll in. It seemed like every year. And, you don't get to see the fire. You could hear them, but you couldn't see them. So, I know they got, I was seeing something about they're going to have fireworks and all that. Also saw something yesterday that I thought was very, very interesting. Hotel room cost per night. New Orleans this year is the most expensive city to celebrate New Year's.
Wow.
Listen to these average hotel prices. At number 3 is New York, $1,164 average cost per night. Miami, $1,184. And number 1 is New Orleans. Average cost for a hotel room per night, the most expensive place to spend New Year, $1,190. Now, I think that has a lot to do with the Sugar Bowl this year, right? I think,
that's a solid point.
Right? The Sugar Bowl having Texas and Washington, and it's actually a playoff game this year. It's not, some throw-ins. So I think that has a lot to do with
and
it.
Two teams that travel well, too.
Yeah. I mean, Texas is going to travel because they're excited, and Washington being back involved. And so I think that's pretty cool, the matchup. I used to love going downtown this time of year, just seeing the other teams. Back in college, I had some roommates that worked at the daiquiris on Bourbon Street, and just kind of seeing all the teams come into town and wearing their colors. It was always so it's fun. So obviously,
stop lying. You went down there for the same reason I did, because all the college girls from those colleges.
I
would
mean,
show up
okay, all right, whatever, man.
Let's be honest here.
Okay, all right, you're right. You're right. We do keep it true and factual on this show. So good point. Good point. But I think this year it's going to be chilly. I think it's supposed to be a clear night. I think until like 2-3 in the morning. I think, or something like that. But by that time, who cares? You could probably use the rain hitting your face anyway at that point, kind of like a cold shower. So, I think that's pretty cool, man, to see that, the city's getting some vibe going, getting some things going. And, I'll probably just be chilling at a house party or a local establishment over on the North Shore just to stay safe there. So we shall see, man. So, I'm heading over tonight, though, over to Rockin' Blues. My boy Captain Charlie, his wife, some other friends. We do the New Year's Eve. They've got Bucktown All-Stars there tonight.
Those guys are awesome.
Yeah, they're amazing, man. They're like withstand the test of time. They never get old. It's just good stuff.
My band opened up for them one time at Southport Hall.
Really?
You talk about they stole the show. We're wrapping up our set, and they've come marching in with a marching band. I mean, it was nuts, man.
Really?
Yeah, they were awesome.
Yeah,
Great.
Good stuff there. So, I think as reflecting back on 2023, again, taking politics out, taking all those things, I think we've seen inflation. There's a lot of things that have happened this year. And we told you in the beginning of the year, we told you kind of midway through last year, hey, we're going to charter through this. We're going to help you navigate. Home, we get it, your most valuable asset. We're going to walk you through. And I think we've done that, and really looking forward to 2024 and continuing. That's why I would tell you, hey, go subscribe to our YouTube channel. Go to YouTube, type in Mortgage Gumbo. Go request to be a member of the Gumbo Nation. We're going to keep putting out more content. A lot is going to be happening this year. It is going to be the year of the giveaway, right? It's an election year, folks. So the giveaways are coming. And we'll keep you updated on what those things are. But I want to kind of, again, tell you, when we start hearing about Fed cutting rates and all that, that is not mortgage rates. Okay? That is not mortgage rates. That's your credit cards. That's those things. So keep in mind. Now, it may simultaneously, you'll see, because mortgage rates follow inflation. So if inflation's coming down, then we'll see. In my opinion, I don't think we're hearing about the Fed's going to cut rates and the percentages, and some people are saying 6 times next year. Man, I don't see that. But who knows? It is an election year. So the giveaways, it's almost like you're going to see a lot of the buy one, get one frees at the stores. You've got a lot of people now who are in survival mode. You know, I'm starting to see a lot of Facebook posts, and it's unfortunate where you're seeing, like, after 32 years, this bakery's closing, this restaurant's closing. People did all they could to try and hang in there. So how does that affect your local economy? What does that do? Does that, hinder things? In our market, what are we going to see? We're going to talk about that, in this show. But also, the real estate industry is going to change in 2024. It's going to change. And it's going to create opportunity. But just from a standpoint of for realtors and lenders, there's a lot that are going to be getting out of the business, which I welcome because I think they need to be doing some other things, right? I think they need to be trying some other things. It's one of those things where I take it personally, and Parker calls it passion. Because I see a lot, and that's why we do this show, and we could do this show weekly, daily, but don't get any crazy ideas, iHeart. You're not going to Gregory Ricks me, but you got me on every day. But just based on the stories and the things, and while we share lots of positives, it's unfortunate a lot of you listening right now, especially newcomers, you hear things for the first time, and it's different than what you've been told or what you've been led to believe. And that's where this show will continue to, I don't want to say debunk myths, but make sure that you are aware of the facts and what the truths are. And we always use data to back that up. Do I give an opinion here or there? Yeah, but a lot of my opinions are based on research and data, right? We've talked about all year how tough and how brave you had to be a homeowner, right? Or to come buy a home. So it's not like we've sat here all year going, oh, my God, what are you waiting for? You should be buying a house and selling this bed of roses, so to speak. We get it. I get it, right? I'm amongst you. That's why you like to listen. We keep it real here. So I think we're gonna help you continue to navigate. Like I said, we can sort of see the shore ahead of us, but there's also some channels with some shallow points. So we got to make sure that we keep directing you on that. So, hey, on the other side of the break, we'll have our last rate watch of the year and much more to come. So stick around. First-time homebuyer tips and what is locked in effect. Stick around. We got a great show planned for you. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. 504-260-0995. There you go. That was a good one.
2000 party over. Oops, out of time.
Dude, do you remember when the
It was 1999.
Yeah. Remember when it was I guess what is it? The century was changing, right? No, what is it? What's every 100 years? Is that a saying?
The centennial?
Yeah, remember 2000 and everybody thought like
oh yeah, the Y2K bug and all
yeah,
that
the
stuff.
Y2K and
oh yeah, dude. So like I bought my bar in 2001, and at that point I was almost bought this bar out in Metairie, and I was the DJ there. And it was like 2 years in a row we got to play that song at midnight because we played it in 1999, and then we played it on 2000.
Oh, gotcha. Yeah. I remember, like, oh, the computers aren't going to be able to change the zeros.
Nothing's going to work. It's all going to, everything's
all the
gonna
pilots,
collapse.
the pilots have to have their manual flights because the flight computers.
Yeah, it'll crash, but then the plane will crash.
Right. Like.
Yeah. The Y2K panic was great.
Yeah.
And then the 2012 panic when everybody thought the Mayan calendar might be correct.
Correct. Yes. And, yeah.
Humans, we're such silly species.
Yes.
All right, 1 minute.
Yep.
Ten seconds.
Yep. Man, you are knocking it out the park, bro. DJ Dave, D Squared, getting it done for you this morning on Mortgage Gumbo New Year's special. You're listening to Mortgage Gumbo. Hey, if you want to join the show, dial it up, 504-260-0995, or shoot an email to info@mortgagegumbo.com. Happy New Year. If you're wondering how can I find out what my buying power is, should I refinance, go to Mortgage Gumbo or go to snapsendandsave.com. That is the place to go. Starting to see a lot of activity picking up. So, Gumbo Nation, what does it mean? What does the Fed cuts mean? And we briefly touched on this in the first segment, but with the Fed cutting rates in 2024, what does that mean for you as home buyers, right? And I think, again, what I want to make sure I explain to you is the federal funds rate and the Fed cuts. Every time they do that, it is not a reflection of mortgage rates. Mortgage rates follow inflation. Mortgage rates follow the 10-year Treasury, okay? Now, there's going to be times where those things coincide because inflation is such a factor right now, and it's having a direct impact. But keep this in mind. When the Fed, it's called the federal funds rate. So when the Fed says they're cutting, maybe 75 basis points to 150 basis points in 2024, that's not mortgage rates. So that means right now when you're sitting at 5.5, that's going to mean 4.75, right, on that. Those are what goes into effect, Gumbo Nation, when you're talking about short-term loans. The Fed affects short-term rates. So if you're looking at Treasury yields, if you're looking at, you're watching a business channel in the morning, maybe your New Year's resolution is, become a little bit more educated about some things. Look at your 2-year Treasury. That's more of what the Fed's handling. 10-year Treasury is mortgage rates, okay? You'll see, especially, right, you may see Fed, the 2-year Treasury going down, and the 10-year was up. That's called an inverted yield curve. We had that all this year. That's why right now you could still go to the bank and get a 3-month CD or a 6-month CD for a better price than you can an 18-month or a 2-year. How crazy is that? So with the Fed, when they start talking about the Fed cuts, here are the things that you're going to see that are going to be affected. You're going to start to see some of that 0% financing for auto loans come back, right? And not just 0% financing for 24 months, like when you read the fine print, but maybe it'll get back to the 60 months or 4 years, maybe even back to the 72 months. Credit cards. You'll see some relief from that average of 20, look, in the last 18 months, you went from 0% on your credit card right? Paying your minimum payment went from 0% to an average of 25% now. That's a huge factor in your monthly payment. Huge. So maybe you'll see some relief on that. Right? So for some of us who maybe every single month can't pay, well, I pay my balance off every month. Hey, good for you. Good for you. That's awesome. But for those who can't, hey, maybe you'll start to see a little bit relief when that statement comes in every month and it's like, you know, bobbing for apples. You don't know what you're going to come up with. You open your statement and you're like, oh my gosh, what happened here? Because all of a sudden that payment changes. So you'll see some relief there. Student loans. We talked about last week. Amazing number, 40% didn't make a payment. After 3+ years of being where you had a moratorium, you did not have to make a payment, student loans were in deferment. You didn't have to make a payment, and then 40% of you, and when I say you, just, you know what I'm saying, us, how's that? 40% of us didn't make that first payment. So maybe you'll get a little bit more relief there. So you're going to see it on those monthly bills every month that come in. You'll see a little bit of relief on those variable rates and stuff like that. So that'll be a good thing for that. It's not going to affect mortgage rates directly. It's going to create a buzz. They're going to blow this stuff out of proportion. And think about this. If they, right now what they have is quantitative tightening. That's what that's been. When they go to quantitative easing, well, folks, now the banks are going to have no incentive. They can't give, all of a sudden, the word free checking comes back around. Right? Are you willing to, at that point, put your money in an 18-month CD because you're getting a 0.5% more? Do you want to hold that money up? Those are all things you're going to have to kind of look at and figure out as we go forward. But I think for home buyers, this Fed cut, it creates excitement. And that's a good thing. And I've made it clear over the last 18 months, especially in this past year in 2023. A home buyer, you've had to be brave. But you know what the home buyer has done too? They've continued to build wealth. They've continued to win. All the experts thought home values this year were going to be flat to down. They're going to end up with 6 to 7% appreciation. Depending on some markets, even more I've seen. So keep that in mind. Real estate is local. All right, let's get into our final Rate Watch of the year. Rate Watch is brought to you by Tito's Handmade Vodka. It's America's first handcrafted vodka. 5-month lows, folks, on rates. 5-month lows. And I can tell you that is enough to get people interested, to get the buzz going. Okay? You're looking at today, 30-year conventional, 6.67. A 15-year is at 6%. 6%. We're quoting people in the mid-5s on 15-year terms. Not sure if that's something that it's time to do yet, but maybe if it's a streamline. We'll talk about that maybe next week as well. Want to discuss streamlining with that part. FHA, 6.08 on FHA loans. Jumbo, 6.96. That's down from 7. VA, 6.09. Again, opportunities starting to present themselves with VA. And then a 5-1 arm, who cares, 6.18. Silly right there. Silly to even consider an adjustable rate right now, in my opinion. So when it comes to rates, folks, rates are keep this in mind. It's important. But it's a number on a piece of paper. So the rate is going to kind of help determine what your buying power is. And that's why, like we said, with the rates falling like they have, you've picked up in buying power $25,000 to $30,000. You're able to go get into maybe that next home bracket. Or you're able to say, hey, I like the price point I'm at. I'm comfortable with that. I don't need anything bigger than, a $200,000 house. It's a starter home. Well, guess what? Maybe now your payment just got lower. So, but the other factors that still come into play is, hey, are we looking at what is the homeowner's insurance doing? What are those things? So there's still a lot of obstacles, especially for us here, right, in South Louisiana, South Mississippi, with the homeowner's insurance. South Louisiana more than anything. South Mississippi, for some reason, and we're doing a lot of loans. Look, we're licensed in Mississippi, so if that's your market, get with me. We can help you there. But we're seeing some movement out there. Just because, for some reason, the homeowners hikes and folks pulling out there, the insurance companies, they don't deem Mississippi to be as much of a threat as South and Lower Louisiana. So, going to continue. Listen, 2024, there's going to present opportunities. So you have to understand what those are. You have to get yourself educated, folks. You have to. Because you're going to have to make sure, if this is that year for you to become that homeowner, or even refinance. Refinancing, you got to start sitting here thinking, are you holding on to that 4% rate like a badge of honor, yet you're living in purgatory? Because when you go buy bread and milk, you use the money in your pocket. Every refinance we're doing right now, we're saving people on average of $500 a month. $500 a month. Well, Dwayne, if rates are going down, I'm going to wait to do that refinance a little bit longer. Okay, but how much is the difference of you holding on to where you're at right now and paying all that interest versus $500 to $1,000? We got another person, $2,200 a month we're saving. That's now. That's feel good. That's getting things in order now. Your home's only going to continue to go up in value. And then you look at those opportunities down the road. All right, on the other side of the break, what is locked-in effect? We introduced this to you months ago. We're going to revisit it because I think it's important you understand what this is, the whys. I'm going to tell you the things that nobody else is telling you. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
It was 1980-something in the world that I grew up in. Skating rinks and black Trans Ams, big hair and parachute pants. And looking back now, I can see me. And oh man, did I look cheesy. I wouldn't trade those days for nothing. Oh, it was 1980-something.
You ever heard that song before?
Yep, sure did. I like that. Oh, my God.
You've turned my life around. The sweetest days I found with you
Through the years. 9 years, Gumbo Nation, we've been hanging out. Love you for it. Happy New Year. Hey, home away from the show is mortgagegumbo.com. You can also call 504-207-7600. Always got somebody on standby. Like I said, hey, go join, go check out, type in Mortgage Gumbo, Google it, go to YouTube, follow us. We got a lot of things going on. More of just education and options as we head into 2024. So I think it's going to be a good year, a really good year for a lot of you. So let's talk about, so we got a great question this week that I want to get to. Somebody basically asked, hey, what is your outlook for 2024? You've been talking about the experts and all that. So we'll get to that in a second, but want to kind of revisit a term called the lock-in effect. And what this is this is for the almost 70% of home buyers, homeowners, who have a note under 4%. This is the part nobody's talking about when people start going, oh, people are going to buy homes. Oh, I'm going to wait. This is why, folks, you need existing home sales to have a successful housing market. An existing home is a home that's already been lived in. That's the people like me and all these other folks who have under 4%. What in the world do you think is going to take for folks who are locked in with that low rate to sell? Because to me, it's not necessarily a number. Because guess what? I gained another $25,000, $30,000 in equity this year. So my house is doing, and this, again, rolls back to the value of home ownership. And it did the same thing for folks who bought this year. You're making money on your home. A home is a wealth-building tool. Plus, it's also your safe place, right? The roof over your family's head. There's nothing better. But when it comes to 2024 and why, I think when you talk about breaking the bridge, so to speak, the folks who are buying earlier are going to benefit because home prices are only going to go up. And inventory, because of the locked-in effect, isn't going to go through the roof. It's just not. It's just not. And then who's to say all these folks with that 4% rate, because I've already started to see it, are not going to refinance. So that lock-in effect, it's all about supply and demand. So when you're hearing this on TV, people are locked in effect, that basically means they've got a low rate on their mortgage and their home value keeps appreciating, which means their equity's growing, which means your wealth is building. So that is a good thing there. But that is going to have an effect on the market. So let me go into a little bit more detail. Great question here this week. Dwayne, and it was simple. Dwayne, what is your outlook for 2024? Okay. And, at the end of the day, I'm going to give you what I see, right? Talk to dozens of people every single week. And remember this, real estate is local. It's market specific, okay? What's going on in St. Bernard may not be the same thing that's going on in, Hammond. What's going on in Metairie may not be the same thing that's going on in Kenner or in Gretna. Right? There's a lot. Mandeville, Slidell, North Shore, two different markets. Mandeville, Covington. Heck, Mandeville, Old Mandeville. Right? So, but what I feel is this, and this is where I differ, or I just kind of keep it real. You're going to have a lot of people out there, you're seeing on Facebook, these realtors, and you're like, oh, buy. I truly believe, I think you're going to, and I don't agree with it, but I think you're going to continue to see folks kind of wait to purchase. And you're starting to see all these surveys that backs up what I'm saying. And for some reason, 5%, not in the fives, 5% seems to be the number that people are talking about, that's what's going to get them excited in the market. Oh, when rates hit 5%, then I'm going to jump in. So, and again, a lot of this has to do with maybe some existing homeowners, is that the lock-in effect. Home values are going to continue to appreciate. And home ownership will continue to be an amazing wealth-building tool and investment. Now, keep this in mind. In the last month, we've been talking about interest rates, right? Interest rates have fallen by a little bit over 1%. That means 5 million folks entered the market. 5 million. So when you're in a low inventory market due to locked-in effect, we talked about new housing and how the actual inventory, when we explained last week how that works, month supply, you're only sitting at 1.6 months of housing supply. You've got less than 100,000 houses completed in new home sales in the entire country. So it's going to continue to be a low inventory market, which means if you have to sell, you're going to get premium dollar. But it's only going to continue to go up because there's so much pent up demand. I know I've got 30 to 40 buyers who are just sitting on the sideline right now. Now they're starting to call, but it's tens of millions of dollars of buyers who are waiting. And is it true that before we get to that, so existing home levels, I think we'll see it the same as it was this year. I don't think you're going to see a big deal, a big jump. People all of a sudden are selling their homes, unless it continues to see 4D. The existing home sales we're dealing with right now, they all fall into the same category, Gumbo Nation. Death, debt, distance, right? These are the things that when you're looking at it, that's what's causing people to have to sell. No other reason. People aren't selling their 2.625 rate house and moving into a 6.5%, 7%. So I see existing homeowners, they'll continue to keep that low rate. But you want to know what else they're doing, which again is why inventory isn't just going to blow up. I'm showing folks how to keep that house, keep that 3%, 4%, and turn it into an investment property. I'm wiping out, having to count their current mortgage note and helping them go buy something else right now, knowing that they'll refinance that to a lower rate, but buying before home prices shoot through the roof, and they will. Because the Fed, all bets are going to be off the board. That when it comes down to it, as much as we don't want to believe it, it's political. And all this stuff, hey, we're trying to temper this and temper that, home prices are going to go through the roof. Because when you start getting those credit card payments down, everything like that, spending is going to pick up. So everything they were trying to temper and the pain that they inflicted on us, right, over the last 18 months, hey, who cares? We got to get people elected. It's just circling the drain right now. So, and then what about those folks that are in existing homes? Like I said, if you want to know how I can help you keep your existing home at under 4% and go buy something else, go to mortgagegumbo.com. Go to snapsendandsave.com. Reach out. We could chat. I'm doing it for 75% of my business right now. That's how I know when I say what the outlook is, I see it. Just like y'all great at what you do and you see what you see in your careers and in your professions, I would have to ask you. And I think refis are going to turn around. Because at the end of the day, we touched on this. I think at the end of the day, people are struggling right now. That credit card debt's through the roof. And people just keep throwing that slab up, right? Hey, it's going to get better. Things will get better. Folks, this year alone, how much equity did you gain? Don't sit on that. Maybe that number on a piece of paper on your current mortgage rate feels good. Maybe it feels good. But what kind of quality of life are you living? When every day you go to the mailbox and you're playing Russian roulette on what is my credit card payment this month? Or maybe you're one of the 4 people out there, 1 in 4 of you listening, 25% of you have a car note over $1,000. So maybe getting rid of some of that other debt will make making that car payment a little bit easier. So I think in 2024, you're going to see refis because debt is through the roof. It's a fact. And before you start losing that credit score, all these years of working your tail off to go earn that 2.5%, 3%, 4%, 5% mortgage rate, don't throw that away. See if that refinance is right. Save that money now. Save it now. And then take advantage of maybe later on when things happen. But you're going to continue to see values go up. I think home buying, the purchase business, it's going to come, but it's going to come a little bit towards the end of the year, which I don't agree with. I think buying now is going to be better than the end of the year because inventory is not coming from anywhere. That's why we brought up the locked-in effect. So if you've got questions, you want to know what is the next move, Dwayne? What do I do from here? Do like thousands do every single year. Go to SnapSendAndSave.com. No cost, no obligations, just answers. And let's find out, is a refinance right for you? How many of you maybe have an FHA loan that you pay in PMI? That not only can I get you a lower rate now, I can get rid of that mortgage insurance. So maybe I save you 1.5% on your current rate, but you pick up another couple $100 because I get rid of that PMI. Let's talk about that. Let's relieve that stress. I know you're going to be looking to get physically fit and all those, New Year's resolutions. Hey, come where so many thousands trust. Come over to get financially fit with me. No cost, no obligation. Let's find out if moving forward with us to do a loan to put you in a better financial situation for your family. Why not start that today? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. Stick around, first-time home buyers. I got a couple quick tips for you to get you ready to make 2024 your year. Mortgage Gumbo with Dwayne Stein right here on iHeartRadio.
Good old Eddie Murphy.
Yep. Party all the time. My girl wants to party high. What is up, streamers, Gumbo Nation? Thanks for hanging out. Got a bunch of y'all across all the social medias. What, it's too chilly today? Hanging out, I like it. I like to see it. Happy New Year to you as well.
All right, 1 minute, and when we come back, we'll have about 6.
Perfect.
Minutes.
And your laughter too. Welcome back. Happy New Year from Mortgage Gumbo. Excited to be turning the page into 2024. So cheers to you. All right, our final segment of 2024. This is for you, first-time home buyers. There's so much advice. There's so much just stuff out there. We'll leave the word stuff instead of the other word that is just not true. So I want to help you, the first-time home buyer, okay? The fact is, first-time home buyers are basically 30% of the purchase business that's going on right now. So I think you're very relevant, regardless of what your age is. And we like acronyms on this show. So, you know, for first-time home buyers, here's sort of your tip I want you to think about, right? And the acronym we're going to go with is CDC, okay? And that's credit, debt, cash. CDC. So if you're writing it down, hopefully you're not driving, CDC. Or, hey, subscribe to all our stuff, and then you could rewatch this and all that stuff. So let's get into CDC, because what that equals is your budget. Everybody wants to go, hey, find out what your budget is. Well, how the heck do I do that? You don't know. That's easy for people to say that are in my industry. But what about you, who you're a nurse, you're saving lives, hey, you got a cough. Was that cough, the flu? Is it just, dryness? What is it? So let's jump into this real quick. So when it comes to credit, I want to share a couple tips for you, okay? 10% increments. Not everybody could pay their credit cards down for every single month, right? So work in 10% increments. If you've got a $1,000 credit limit and you're at 920, get under 900. That'll increase your score. Okay, so work in 10% increments. You want to be under 30% to maximize your score for that particular credit card. Okay? And keep in mind, February is always credit month, so of course we go over all this, but why wait till then? Hey, those credit cards that you've been paying well, and maybe you're at 920 on that credit card that you've been paying great. Hey, you want to know what you could do? Call them and ask them to increase your credit limit from 1,000. There's no cost for this. And they could run a soft pull for you, so it's no hard inquiry, and now get them to increase it to even 1,200. Now you've dropped your utilization and not have to do anything. This week we raised somebody's score 38 points by shifting balances. Did not cost them one penny. So thank you, lender, who just judged them by a credit score. Because just by shifting things around. This is why with credit, talk to a professional. Don't just go to those credit repair companies who want to just dispute what you have going on. That's not a good thing. Secondly, debt. We got to get it in check. So where are you at with credit cards, installment loans, student loans? Where does that add up to every single month? But also understand when we're trying to figure out your budget, we don't count your cell phone bill. We don't count what your current rents are. And we explain all that on the Snap, Send, and Save website.
2 minutes.
But there's things out there that a lot of you think go into you qualifying for a home that don't. Again, this is why you need to be speaking to a professional. And then lastly is cash. And the reason I put cash last is, yes, cash is important. We talk about this all the time. Credit's right up there with air and water, and cash is king, right? But you've got what you've got in cash if you're trying to save. But start putting together, what are your options with cash? How much money do you have? Is a gift an option? We talked about that 2 weeks ago, what gifts are. So then we can review everything, and that's what's going to equal out until in what your budget is going to be. But if you've got cash, we may not have you go pay down that Visa bill all the way from $900 to $100. I'm going to work with you to maybe pay it down and get the score where we need to be so we don't need the rest of that cash. Cash is king, folks. Work with the professionals. First time, especially you first-time home buyers, we got to get it right. It's your first home. And we, in my opinion, do that better than ever. We've been doing it for 30 years. You will always, when you hire Mortgage Gumbo, you are the only person that matters. We treat each client individually.
20 seconds.
Go out, be safe. We'll see you in the new year. Have a great end of 2023 and look forward to a lot more Dad Cam in 2024.
10.
Till next week and next year, Gumbo Nation, keep stirring the pie.